What's going on, guys? Throwing together a quick update video. Today pretty much played out exactly how I expected. I want to reiterate the fact that this third bottom, the lower low that we just saw, was projected 2 months ago. I mentioned that extensively in my last video. This move down to the downside for our third bottom was what I was looking for the past 2 months, the lower low. With that being said, from this point, we will be forming an uptrend and squeezing. This is the final landmark to the downside on AMC's macro. So jumping into the video now, starting with the macro on AMC, I want to touch on the fact again that AMC's macro is a fractal in an uptrend. So all-time lows on AMC right here, the flat pattern that played out 2020 leading to the January 2021 squeeze. All-time low on AMC right there. You get the first squeeze, you retrace, you get the second squeeze in June, and then a pullback for the past 2 years roughly. So once again, we're playing out the exact same pattern that played out back here, the flat pattern. Again, I call it the flat pattern because it's flat. On the downside, very flat, and over here, same thing. Very flat on the downside. And what we're looking at here is a macro, a fractal in an uptrend. So forming higher highs and higher lows. The flat pattern is playing out right on top of the previous, acting as support. So this is an uptrend on AMC. Whether it feels like it to you or not, the macro on AMC is an uptrend. So I wanted to quickly touch on that. Now jumping into the full macro, again, downtrend from 2017 until you squeeze January 2021, comparably to the downtrend you see here from the breakdown in the flag from the June highs. Macro fractal break, this gap down right here. Macro fractal break, this gap down right here. The W that plays out sideways before you actually get into the downtrend. Once again, you're just stair-stepping, laddering down. 6 points takes you to the end of the blue, and over here, same thing. 6 points takes you to the end of the blue. And then from that 6 point, you drop to the flat portion where you have 3 touches on the bottom. 1, 2, and 3. The third touch is the lower low. It's the lowest low. This is all-time lows on AMC. And from that point, you form an uptrend, which breaks you out of the triangle and a straight line into your squeeze. And over here, same thing. From the 6 point, first touch, second touch, and now the lower low, the third bottom, the final landmark to the downside on AMC. I want to also mention briefly that we filled a gap today, a very important one. The macro break, these 2 gap candles that I've shown multiple times, we filled this gap today. So very interesting filling that gap at the end of our macro. Moving on though to the flat pattern. So now we're zooming in on the 1, 2, and 3 bottoms of the previous cycle that led up to the squeeze, comparably to the 1, 2, and 3 bottoms of the current cycle here. So jumping into that now, and I showed this last video as well. You have a downtrend here, which takes you to your first bottom, very choppy. And then in the current cycle, same thing, downtrend to the first bottom, very choppy, a few breaks above, same over here. I want you guys to really pay attention to these horizontal lines. This blue horizontal line and this red one here, and then the same up here, this blue and red. Because these horizontal lines are extremely important and have been respected perfectly just the way that we saw in the January 2021 cycle. So from your first bottom, you gap up as you do here. I mentioned multiple times all the gaps are the same. So you gap up and you have 5 peaks in increasing height. And over here, same thing, 5 peaks increasing height, the white dots. From that 5th point, you come down, you break below the red line on both sides, you break below it, you bounce right on the blue, you get this W with a lower leg on the left, and you reject the red line again. Over here, same thing. Lower leg on the left, come back up, reject the red line. From this rejection, you come to your second bottom. In the previous cycle, it was a very slow, choppy downtrend, a reiterating bear flag, and in the current cycle, just a straight knife after hours. So from your second bottom now, you gap up in both cycles, and you break above the blue line, you break above the red line, and you get the first peak of the tri-peak, as you see it here. From that point, you break below the red line again, as you see it here, and then you break above it, second peak. From your second peak, you come down, break below the red line again, as you see here, and then your third peak, you break above, as you see here. Again, the third break above the third peak of the tri-peak was a very, very exaggerated move. It was a complete fake out. I mentioned multiple times while we were going through this that theoretically this could have been our third bottom. It wasn't a lower low. We were looking for a lower low. This was not a lower low. But, you know, having bounced off of this and then formed this uptrend that led to this move to $9, I theorized that maybe we would not be getting a lower low for our third bottom. Hindsight 2020, I should have known better that we would be getting a lower low for our third bottom, because that's how fractals work. They repeat. So from that third point, you break below the red line, and then you break below the blue line. You actually reject the red line here. So you reject it here, which takes you to your second bottom. You reject it here, which takes you to your third bottom. Both of these were slow, choppy downtrends. Nonetheless, took you to your second and third bottom from that red line. Over here, you reject it here, after hours knife down to your second bottom. And then over here, reject it again, after hours knife down to your third bottom. The lower low, the final landmark to the downside. Now, having checked off this final landmark to the downside, we should be forming an uptrend now, which is going to break us above this blue line, which is roughly 401 to 408-ish, this blue line here. And then we'll be fighting for this red line, which is roughly 520. And a break above 520 is your signal. Break above this red line here is your signal that things are about to go down, we're about to squeeze. So that's what I'm going to be looking for now. Two very crucial levels, this blue horizontal line and this red horizontal line. So we'll just say 401 and 520. Those are the two levels that I'm going to be paying very, very close attention to. Moving on. The flat pattern zoomed. So I just showed this. I'll go over the final iteration again, the W with the tri-peak. Downtrend, you break below the red line, you get this move in the green, which rejects the red and takes you to your second bottom. Over here, downtrend, breaks below the red line, you get the move in the green, rejects the red line, takes you to your second bottom. Again, a knife after hours compared to slow, choppy downtrend. You gap from your second bottom in both cycles, you get the tri-peak, 3 breaks above the red line, as you see it here. And then from the red line again is where you reject and then come down to your third bottom. Again, very slow, choppy downtrend in the previous cycle. In the current, once again, a knife after hours. When you do find your third bottom here, the lower low, you form a very slow, choppy uptrend, the channel. And most of you are probably familiar with this by now. You form this channel, forming higher highs and higher lows. You got to break you got to break below it, chopping around below it before you reclaim, and then you gap up over the blue line to the next range, fighting for the red horizontal line. So that's what I'm looking for now, is chopping in this channel before we get a gap up over this blue line, over $4 roughly, and then we'll be fighting for 520. Once you break 520, which theoretically we should be breaking with a gap up, this is your macro break right here, which takes you a straight line into your squeeze. I'm assuming this is going to play out faster in the current cycle, and I'm going to touch on that why. Why do I think this is going to play out faster? Simple math. So I did this yesterday. I found this very interesting, and then the news today, the timing of the news today is immaculate. And if you remember me saying for my very first videos on YouTube, the conversion reverse split is our catalyst for the squeeze. Well, today it was announced that the reverse split will be going into effect next Thursday, August 24th, and the conversion of APE into AMC will be Friday, August 25th. So next Thursday and next Friday, August 24th and 5th, the reverse split and conversion will go into effect. And I've said from the beginning, that is the catalyst for our squeeze, and the timing, having just checked off our third bottom, the lower low, which should be leading to an uptrend, which takes us to our squeeze, the timing of this is impeccable. Perfect timing. But I want to really quickly go over some quick math. So in the January 2021 cycle, from the start of the flat portion until you get to your third bottom, so from the start of this until your third bottom, 319 days. Current cycle, from the start of this, the flat portion, until your third bottom, 253 days. So 319 days versus 253. Right here, January 2021, start to third bottom, 319. January 2023, start to third bottom, 253. Now, dividing that, 319 divided by 253, 1.2 times faster in the current cycle. So in the current cycle, we are running through the flat portion 1.2 times faster than it played out in the January 2021 cycle. Now, moving on from that, from your third bottom in the 2021 cycle until your peak. So from your third bottom until peak was 15 trading days. Now, using the 1.2 multiplier, from our third bottom until peak, 15 divided by 1.2 would be roughly 12 days. 12 trading days lands on August 29th, which is also 7 trading days post OPEX, which is very, very interesting. So just very simple math here. How fast are we running through the flat portion? We're running through it faster, 1.2 times faster. 15 days from third bottom till peak. 15 divided by 1.2 is 12 days. 12 trading days lands August 29th, which is 7 trading days post OPEX date. The exact same way the previous 2 squeezes, January and June, played out. So really quickly, what you have is all of this week, and then you have all of next week until Thursday. You get the reverse split. Friday, you get the conversion of APE and AMC. Weekend, 26, 27, and then Monday, Tuesday is the 29th. So very, very interesting timing there for the reverse split conversion, and very interesting, very interesting timing of where we are in the flat portion, and getting news now that the conversion reverse split will be going through next week. So daily gaps, I mentioned multiple times, are all the same. We finally have checked off the lower low here. I'm not going to go through all the gaps. Here would have been the third gap down. I do want to touch on this once again. Very slow, choppy downtrend to your second bottom. Very slow, choppy downtrend to your third bottom. And then in the current cycle, gap down and then gap down. So your second and third bottom in the current cycle, just straight gap down after hours to the bottom. 2021 cycle, you get a gap down on both sides, but it's a very slow, choppy downtrend, which takes you all the way down. Now, from our third bottom, we should form this channel, which should end with a gap up to the $4 range. So we're going to be looking to gap above this channel now. So I'll keep updating this daily. I'm assuming we will be trading in this channel here. I'm not sure how long. The second bottom, when you gap down here, you're only down here for 2 days, and then you gap up. It's very possible you get something similar to that as well. So just keep that in mind. But we will be looking for a gap up to the $4 plus range. That's the next landmark we're looking for, is that gap up. EMAs, I'm not going to really go crazy with this, but the EMAs are pretty much the same as well. You got this wave move, with a higher peak on the right. And then coming down below the 50, you touch on the second peak of the tri-peak, come down, and then break above on the third, and then over here you break below the 50. You actually crossed here, second peak of the tri-peak, break below, and then cross slightly again. And the 20 has now crossed the 50 to the downside. I'm assuming the 20 EMA is going to meet price action around low to mid $4 range, where, theoretically, if we do get the channel, we'll be fighting for it. It's very possible we just gap up over it, though. We'll get this gap that we're looking for. Pretty much what we're doing here is tracking the same exact way we were here, this uptrend here, before you get the gap up. We're doing the same thing right here now. Again, this was just a complete fake out. We never got the third bottom here. I was looking for it the whole time. I speculated that pre-market gap down to 389 maybe could have been your third bottom. This gap down right here, it broke below the blue line. So, I speculated maybe that could have been the third bottom. It wasn't the lower low we were looking for. Formed an uptrend, got this crazy move to the upside to $9, and then we finally got the move down. Fake out, if I ever saw one, right here. So that's pretty much it. 2 important levels to break, $4 and $5.20. That's what I'm going to be watching. Theoretically, we should be gapping up over the $4 level, and then we should be gapping up over the $5.20 level after we play out all of this. It's not going to look exactly the same. I'm imagining it actually looks something like this. Just looking at your second bottom to the left, you get the break over, and then you reject the red, come down, establish support on the blue before you actually break over it. This would play out much faster. It would just be a straight line into your squeeze. So that's what I'm going to be looking for, pretty much this inverted right here. So you break above the blue, reject the red, come down to the blue for support, gap up over the red, straight line into your squeeze. And once again, the timing of the reverse split conversion, craziness. But I don't really expect nothing less. So that's pretty much it for the video. I would not expect anything crazy for tomorrow. Uptrend, so higher highs and higher lows. I wouldn't expect anything wild, though. Once again, the first thing we're looking for is the break above $4, and then we'll be fighting for $5.20 after that. Once you break $5.20, you're getting this move here, the gap up over $5.20. That will be your macro break on AMC, and then a straight line into your squeeze from there. So I'll catch you guys in the next one.